Welcome to the latest episode in this series of EY videos on the implementation of the new Leases standard, IFRS 16, which has become effective this year. The objectives of these short videos are to provide some helpful reminders during the first year that IFRS 16 is effective, and to share some of the latest insights that could affect IFRS reporters. I'm Emily Moll, an Executive Director in the Global IFRS Services team at EY Global in London. In this episode, we will discuss some of the findings of a survey of large entities which have disclosed the expected impact of applying IFRS 16 on the date of initial application. I'm joined by Victor Chan. Victor is an International Director at EY Global in London, where he's a member of the Global IFRS Services team and, amongst others, the Global Leases subject matter group. Victor, welcome. Thank you for joining us today.
Thanks, Emily. I'm glad to be here.
Now, I know the research team has spent quite some time on this project. Can you give us an overview of it?
Sure. The objective of the project was to look into the potential impact of applying IFRS 16 on the date of initial application, with a focus on the increase in assets and liabilities as a result of recognizing right-of-use assets and lease liabilities on an entity's balance sheet in various sectors. We started with the population of Global Fortune 500 companies and reviewed their latest annual or interim financial statements that are available publicly. We extracted quantitative disclosures about the expected effect of the adoption of the standard on the date of initial application from those entities which prepare financial statements based on IFRS as issued by the IASB, IFRS as endorsed by the European Union, or national accounting standards which are substantially the same as IFRS and will adopt the new Leases standard. This is a study on IFRS financial statements, and thus the 255 US GAAP and other local GAAP financial statements that are not prepared on substantially the same basis as IFRS, together with the financial statements which are not publicly available and hence we don't know the basis of preparation, have been excluded.
And did we look at the actual impact disclosed by entities that have early adopted IFRS 16?
Yes. For an entity that adopted IFRS 16 early, we extracted actual quantitative information related to the application of IFRS 16 from the latest annual financial statements. For entities which are only adopting IFRS 16 from the effective date, we extracted quantitative information which is known or reasonably estimable, relevant to assessing the potential impact application of the standard will have on an entity's financial statements under IAS 8 accounting policies, changes in accounting estimates, and errors in the standard, like IFRS 16, that has been issued but is not yet effective if these quantitative disclosures were made.
So how many entities were included in the survey?
There were nearly 250 entities included in the survey. Just over half of them are European entities, 1/3 of them are Asia-Pacific entities, and there are also a number of entities in the Americas and Japan included in the survey. Just around 2% of the samples adopted IFRS 16 early. So the results of the survey largely reflected the expected impact of applying IFRS 16, but not the actual results reported by the entities, which could be different.
So that's quite a sizable survey. What were the major trends from the study?
Well, we reviewed close to 160 IFRS financial statements or financial statements prepared on substantially the same basis as IFRS, and a further 25 entities which indicated that the impact of applying IFRS 16 would likely be immaterial. This means that 26% of the financial statements we reviewed did not quantitatively disclose known or reasonably estimable information relevant to assessing the possible impact of applying IFRS 16. Some of these entities do not have calendar or March year-end, and thus they may have more time to prepare for the adoption of the standard. But there were many calendar year-end entities outside the European Union that did not include these quantitative disclosures, and we think the level of disclosure seems to reflect the readiness of the entity and the local market environment, as well as the local accounting and regulatory requirements. Another interesting overall trend was that the expected increase in total assets and total liabilities as a result of adopting the standard varied across different sectors. And the expected effect of grossing up the balance sheet as a percentage of the total assets and total liabilities also varied among entities within the same sector. We will discuss this in more detail in the next couple of slides.
Victor, to illustrate your last point, this next slide shows the impact of applying IFRS 16 by various sectors. So can you walk us through this?
This slide shows the expected impact of applying IFRS 16 on the date of initial application as disclosed by the entities. On one hand, the sectors which disclose the most significant expected impact of applying IFRS as a percentage of total assets were airlines, retailers, shipping, transportation, and telecommunications. These sectors generally reflect the long-standing business practice of leasing high-value assets such as vessels and retail space. We will drill down on some of these sectors in the next few slides. On the other hand, the financial services sector, which includes banks, insurance companies, and other financial institutions, seems to be the least affected by the new standard based on their disclosures. The overall average percentage expected increase in total assets for all sectors was about 5%.
And were these results in line with our expectations?
In January 2016, the IASB released their effects analysis which accompanied the standard. Based on their analysis of estimating the present value of future payments of off-balance sheet leases as a percentage of total assets, airlines, retailers, travel and leisure, transportation, and telecommunication were the sectors they predicted to be most affected by applying IFRS 16. So the results of the survey were close to the analysis performed by the IASB.
So let's move to the next slide. So this shows more information about the expected impact of applying IFRS 16 on the date of initial application in the airline sector.
Yes, Emily, based on the survey, the average expected percentage increase in total assets and total liabilities for the airline sector was 20% and 30% respectively. However, within the sector, the range of the expected percentage increase in total assets was 6 to 41%, and the range of the expected percentage increase in total liabilities was even wider. The main factor for driving such a wide range is the business model of an airline. If the business practice of an airline is to extensively use leases previously classified as operating leases under the legacy leases standard for its fleet, then the expected increase in total assets and total liabilities would be much more significant, considering the fact that an aircraft is such a high-value asset.
So the next slide shows additional information about the expected impact of applying IFRS 16 on the date of initial application for the retail and apparel sector.
The average expected percentage increase in total assets and total liabilities for the retail and apparel sector was 20% and close to 40% respectively. The most interesting findings for the sector were that some entities disclosed that the percentage increase in total assets could be as high as 62%, and the expected increase to total liabilities could even exceed 98%. The majority of the right-of-use assets for retailers are retail space in high streets and shopping malls, as many of the larger retailers have a heavy presence there. The effect of applying IFRS 16 could have a very significant impact to the balance sheets of some of the retailers. Our research team found that the impact could be linked to the lease term, among other factors. For entities in the sector reporting the most significant impact, the average lease term could be significantly longer than for those retailers reporting the lease impact based on the time-bound disclosure of operating lease commitments under the legacy leases standard, especially for the period beyond 5 years.
Okay, so moving to the next slide, then this shows some additional information about the expected impact of applying IFRS 16 on the date of initial application in the shipping and transportation sector.
The average expected percentage increase in total assets and total liabilities for the shipping and transportation sector was around 10% and 15% respectively. Within the sector, the range of the expected percentage increase in total assets was 1 to nearly 24%, while the range of the expected increase in total liabilities was 1 and 36%. Similar to the airline sector, it is common to lease high-value assets such as vessels and other transportation assets, and as such, the business model drives the impact of applying IFRS 16.
Let's move to the next slide, which shows some additional information about the expected impact of applying IFRS 16 at the date of initial application in the telecommunications sector.
The average expected percentage increase in total assets and total liabilities for the telecommunications sector was 8 and 11% respectively. Within the sector, the range of the expected percentage increase in total assets was 2 to 13%, while the range of the expected percentage increase in total liabilities was 5 and 17%. So for this sector, the range was not as wide as what we have seen for other sectors such as retailers. There is not a lot of disclosure which explains why this is the case, but the potential reasons might include the use of similar technology and related assets and similar business models. It would be interesting to read the first set of financial statements after the effective date of the standard to understand more about these lease arrangements.
That's very helpful. Before we wrap up this discussion, I'd just like to comment on what all of this means for IFRS reporters. So in addition to understanding where an IFRS reporter stands compared with its peers, I think the main takeaway for IFRS reporters is to carefully consider the adequacy of their disclosures of the adoption of IFRS 16 in the first set of financial statements after the standard becomes effective. Robust and transparent disclosures are necessary in order to give a basis for users of the financial statements to assess the effect that leases have on the financial performance, the financial position, and the cash flows of an entity as a lessee. IFRS reporters should tailor their disclosures based on the specific lease arrangements that they've entered, as boilerplate disclosures don't provide users of financial statements with useful information.
I couldn't agree more.
Thank you, Victor. We've come to the end of this episode in this series of EY videos on the implementation of IFRS 16. So thank you for watching. I'm Emily Moll, and we will bring you further insights on IFRS 16 in our next episodes.